is to serve the community that we work in, and our intention is to be active members of our community and work with every community organization available in the city.
Wow. Okay. All right. Yeah. Okay. We really appreciate what you're doing here, and we really do.
Thank you.
You know, we really need to jump on this and tell everybody what this program is about. Is really putting people into homes. And how do we put people into homes? You know, a lot of things that's been affecting our community more so than anything is credit. Credit has been a big issue in our community, and we need to clean it up. And the only person I know who very good at cleaning up stuff is Laura from Operation Hope. So, Laura, can you talk about Operation Hope? You know, tell us a little bit about everything. And everybody, I'm sure a lot of eyes are looking at you right now. So tell us a little bit about Operation Hope and how do y'all help the community?
Yeah, absolutely. So we are a nonprofit organization, a national nonprofit organization with over 230 locations now.
Wow.
We have very close to 500 employees in the whole organization. And our goal is to provide the tools for all of our community members so that they are able to make financial wise decisions.
Okay.
We have a lot of programs in the organization. One of those is our credit and money management, is the one that I particularly love to do. We also have a youth program where we go to schools and talk to kids about financial literacy, which I think is important because, as we all know, that was not something that was done in our time. We learned it from parents or making our own mistakes. And then we also have a homeownership program.
Okay.
We have a business entrepreneurial program. And the best part about our service is that all of them have no cost for those who register for them and want to participate in them. So I think it's a great way to give back to the community, and for those who we partner with, like the African Leadership Group, so that they allow us to be here during their homeownership program and provide the tools to the clients or information that they need so that they can successfully become homeowners.
So what's been the biggest issue during these financial workshops? I think we've done a couple already. What questions are being asked from you? You know, what's the main thing? Are you cleaning up the credit? What questions are being asked?
So there's a little bit of everything with each individual client that I see. You know, there are some individuals who may have had good credit in the past, and, you know, for life reasons, it just went down.
Okay.
You know, sometimes we get sick, we are not able to work or afford paying back a lot of our bills, and they end up going into collection, and then, you know, it's just kind of like it just, everything goes down for a lot of our people. And so they come to talk to us during our workshops so that they can know where to start.
Right.
And, you know, I always tell them, the first thing you want to know is, where are you at with your credit? Because repairing your credit is not as easy as most people think.
Okay.
It takes time, and it takes a lot of dedication and commitment from the individual.
Okay.
And so a lot of them come and they say, but I follow it through with Credit Karma, and, you know, I think it's great that they use that tool, but it is not what the lenders look at. They look at FICO, and they will pull their own credit score, and that's something that I tell the clients to educate them. I think it's great that you're using this application on your phone, but it isn't the final decisive number. It is a good estimate of where you might be at.
And the great part about that, everybody, which a lot of people don't know, it's free one time a year.
Yes.
One time a year, you can pull your credit score one time a year.
Yes. Through annualcreditreport.com, you're able to pull your credit report through the 3 credit bureaus and get it. And now with the pandemic, I don't think they pulled it out yet. You're still able to get it once a week for free.
Really?
So if you haven't done it, you're, you know, it is your own responsibility to follow through with that.
Okay. So I pull my credit score, and it's 580. So what did I do now? I mean, what's the next steps?
Yeah, so, you know, as you're evaluating your credit report, you want to look at what negative items you have on there, whether they are collection accounts, closed accounts with the balance due. Maybe you've had a lot of recent inquiries on your credit report, and that's dropping your score because you keep looking into it to see if you get approved for something.
Okay.
And that affects your score a lot too. I think it's important for people to familiarize with what drives your credit score up or down.
Okay.
And I like to call those the 5 factors of credit.
Okay.
And so I go over those with our clients when they come to our workshops. I actually have the graph displayed
Okay.
for them on my laptop, and I go through all 5 and explain this is what's happening. And for a lot of them, the little lamp goes on and it's like, oh yeah, that's why it's low, because this is what I did. And this is even before they register for my program and before we even start talking about their own credit score.
Right. And what I've noticed to people, what really hurt people's credit score is not paying on time.
Yes.
More so than anything. And a lot of people don't know, I'm late, 1 month late or something like that. And it's like, and you find out you got a lot late, and it said, the real reason your score is really down is because you're late.
Yeah.
How much does that affect your credit score?
So it really varies by individual. If an individual has, let's say, just 3 credit cards, 2 of them are open, 1 is the only one that is active.
Okay.
And then they have another one for emergency reasons. But if that one that they use almost every day, they are late because that's the only line that is providing, that history.
Okay.
It could drop their score like 70 points, sometimes even higher.
Wow.
So it is the number one factor. As I said, I call them factors.
Yes.
That drives your score up or down. So definitely work on your budget. Try to stabilize those payments. If you already had late payment histories, you want that to become as old as possible with the new habit of paying on time every single credit card or loan or any type of trade line that you may have active.
Okay. Now, one of the things which, I'm just getting out of college and I got a great job. I'm making, $100-some thousand a year. But guess what? I have no credit at all. I went and checked and I have no credit. Mm-hmm. So what did I do?
So there's 2 ways that you can build your credit. There's an easy one and a faster one. If you have a sibling, a parent, right, or a friend that can lend you their excellent credit, then you can ask them to add you as an authorized user to one of their credit cards, and their payment history and their good use will reflect in you. And it takes less than 6 months for that to pick up your credit score. And you will usually get started around the 730. So after that, you get started in a good credit, and if you don't manage it well and it drops, well, again, that goes back to our own responsibility as adults. The other way to do it is to acquire a trade line, right? It could be a secure credit card or a secure loan. It could be for a small amount. A lot of people think that they have to get a car loan, for like 20, 30,000 or whatever to establish credit, and that's not necessarily true. It could be with a $500 credit card, or it could be with a $1,000 personal loan. Yes, they will ask for it to be secure at the beginning because you don't have a relationship yet. The banks are not able to know your habits and really trust you to lend you. So you have to use your own money to start building it. But once you're set, you can ask for more.
That's what I'm talking about. Mm-hmm. That's what I'm talking about.
Yeah.
Great information. So, we talk about credit, and, a lot of times when we want to get a home, we talk about home ownership. Mm-hmm. But for you to get a home, I always tell my clients, well, we need to go get the money first. Mm-hmm. So how do we get the money first? So I want to go to the money man. So the money man right now is my man Brandon from Bank of the West. So Brandon, let's tell them about yourself right now and what do you do? And then we're going to talk about the money side of it, okay?
Sure. Thanks, David. Appreciate it. Happy to be here. I am, my name is Brandon. I'm with Bank of the West Mortgage. I've been there for about 4 years now. Been in the industry since 2005. Love it. As Gonzalo mentioned earlier, just great to be a part of the ALG, serving the community. We have many great programs out there today. Like you had mentioned, buying a home is one of the most important things, one of the biggest things someone will ever do. So it's important that we present a platform for everyone in our community to do so.
Okay. So Brandon, me, I have my client call you and say, hey, I need to get a loan. So what do you require from a client of mine that I just provided to you? What would you require? What documents are required just to get started?
Yeah. I mean, it all depends on the customer, on the borrower, of course. Typically, if you're a W-2 wage owner, we ask for the last 2 years W-2s.
Okay.
We'll ask for a couple current pay stubs.
Okay.
Tax returns are not always required, but we like those anyway, just in case we do need them along the process. If you own rental properties, if you own a business, tax returns are very important, and they'll be needed to qualify. Okay. Typically your recent pay stubs, your W-2s, and then when you get into the asset portion, obviously we'll talk about what you want to bring to the table. If you want to make a down payment, where that money's coming from, we would need to source that. Very important to know where that money's coming from, so we would ask for bank statements. If there's any additional assets, like a 401k maybe, or an IRA, CDs, mutual funds, stocks, bonds, things like that, we would ask for that as well. So we like to, gain and gather as much information as possible. Maybe not all of it's needed for qualifying most of the time, but it's always good to have it. That way we can, we're armed and ready to go for the best approval possible.
All right. So, we're going to go from one lender to the other lender over here. So we're going to swing this around over here to the other lender. So, because the money is the part that's required. So we can't even step into a home until we get the money,
That's where it starts.
So we got all the documents from Brandon. Brandon just told we got all the documents. So after we get the documents to you, what do you do after you get it? Now you have all the documents, and you put it in the computer. What happens next?
Well, we start looking at options. First, we take a credit report out and see where the credit is at.
Okay.
And then we start going through all the options available for the client and try and find which one's going to be best fit for their unique situation.
Okay. And is that based off the money you have saved, or what is it based off? Debt to income ratio?
Yes, it varies on a few things. So it varies on first debt to income ratio. Usually most loans can go up to between 45 and 50. If you go FHA, you can go a little bit higher if you have good credit. We look at debt to income, then we look at the credit score, of course. That's a big decision. And then we look at what they want their monthly payment to be, and other factors, as well as other, like if they have student loans, that's going to affect their debt to income, so their monthly payment will vary. If they want to do a fixed rate versus an ARM, there's a few things that can vary.
Okay, all right. More so because the debt to income ratio has been huge on a lot of stuff. But what I want to talk about now is because we're in Denver right now, and it's an affordability issue right now, right? That's the big thing, affordability. Can I live in this city, this great city and state of ours? So talk a little bit about that. Do you have any programs out there with Key Bank to help with the community?
Yes.
If so, can you talk about it?
Of course, yeah. We have the Key Community Loan, which offers 100% financing with no PMI. PMI is private mortgage insurance. With that, we're also doing a $5,000 lender credit that can be used towards down payment. It could be used towards closing costs, and you can even buy down the rate with that. And in order to qualify for that, the house needs to be in a majority-minority census tract. And for Key Community, this is focused for low to moderate income census tract areas, as well as majority-minority census tract.
Wow. We have some programs out there.
Yes.
So I'm going to switch it around to this other lender over here. Do you have any programs so we can get into with affordability in mind?
We do. Much like other lenders, we offer conventional FHA, VA loans. We have Fannie Mae loans. Home Ready, in particular, offers a 3% minimum down payment. But more specific to the bank, is we are offering a lender grant right now that goes up to, for purchases for primary homes, goes up to $10,500.
Okay.
And it is a grant. Much like Gonzalo mentioned, it is based on a couple different factors, depending on a threshold for income, or if the property is located in a certain geographical tract in an eligible county. So depending on the financing as well, whether or not it's conventional or FHA, there's a couple different conditions involved there. But yeah, for the most part, it's a great opportunity to basically provide free funds to borrowers that may need it as down payment assistance.
Well, usually they always talk about free funds, but we find out that they added interest rate and all that stuff. Is that, I mean, the interest rate go up or anything?
No, not with the grant. The grant is a grant. It is what it says. It is a grant. It's free money that is provided by the bank. There are down payment assistance programs that are available through through CHAC, Colorado Home Assistance Corporation, CAFA, and many others around the city, of course. Those are more structured to where they are second liens, if you will, or loans that typically may carry an interest rate and may carry a payment depending on how they're set up. But as far as our grant right now, that's just money that the bank is offering for certain applications, certain borrowers that fit the eligibility criteria.
So my question is there an income restriction on this?
There is an income restriction. I believe right now it's $94,250 and that's collective for all members that'll be living in the home.
Okay. All right. Great. Now we went to credit. We got the money. Now we need to go get the house. Now I'm the one. My name is David Babineau from Caldwell Banker Realty, and I'm the realtor. So once we get the money, now my job is to find you a home. So basically what I'm asking you, where do you want to live first? I want to find out where you want to live. And based off the money you have, you tell me the location that you're interested in. I usually send out the MLS, and that's listings, homes that's available for you to go see. Once we find a home that you really like, we put an offer on that home, okay? So we submit an offer. It's either accepted, countered, or rejected. If it's to say we had a perfect one and it's accepted, okay, next step, okay, we need to go, it's called earnest money. And typically, earnest money is, it's like a down payment per se, not just a down payment, but it's a deposit on saying, okay, buyer and seller, we are on the contract. Typically, you need at least 1%. So if the house is going for $500,000, typically is $5,000 earnest money. But it's really what the seller usually put in the MLS saying what they want. That's all negotiable. Okay? So that part is up. So you said the earnest money usually goes to a third party typically, and we send the earnest money to the title company. Okay? Now, once we go on the contract, everybody got their money. Now, we have contractual obligations for 30 days typically. Some, if you got your approval done well, some banks, some mortgage company close in 2 weeks. Some close from 30 to 45 days. So you have a timeline to get certain things. So during that timeline, you have an inspection, which is the huge one. That's usually, inspection is something that actually comes out of your pocket. It's not required inspection, but it's required with me as a realtor to my buyer. $350 to $600 on for inspection for a $500,000 house. You want to get an inspection. So during the inspection, if everything goes right, you negotiate during that time frame, and then everything went well, then you have that appraisal. So y'all lenders know about that appraisal. That's when that person actually come out there and say, this is what the house is worth. They actually go check out the house, upgrades and all this stuff, and they tell you what the house is worth. So we have our appraisal. You got a deadline on the appraisal. Say it appraises. It doesn't appraise. Then the negotiations go there. If it does appraise, then we move forward. Then you get to the closing. The idea, then you say, after the closing, successful closing, here's the key. Then we have homeownership. Then we have generational wealth. And that's our goal for African Leadership Group, is to provide generational wealth to our community. All right. I think we're about at the end.
That's very good. I have a question for you, David.
Absolutely.
And, you know, it's a general question for most realtors.
Okay.
When a client goes to you and they say, you know, we are interested in buying a home, if they already know that they have really good credit, do you suggest for them different lenders that are based on what the client is looking for? Do you shop around for them, in other words, or is there a specific one that most realtors already work with?
Well, I've been in business 18 years, so I know 1,000 lenders. And what I try to do, based off the situation of my client, give them, say for instance, I only have $5,000 in my account. Now we got grants here and there that we can talk about. It's, you know, so if I have 2 or 3 people, I try to give them at least 3 lenders.
Okay.
You try to, I want them to shop. I want them to get the best rates. I want them to compare.
Yeah.
That's me. You know, I don't, obviously you want people, I've been working 18 years, so I know who's going to close for me. But the great part about being in the 18 years, you also know who the great lenders are, who gonna close,
Right.
who gonna get to the finish line. Who, when they tell me as lenders, as a realtor, when you say approved, I know it's approved. You did your job from up top. Now things happen, but you ideally would like. Now I always ask them, do they have somebody they're working with already? That's the first thing you normally ask them. Are you working with someone already? Have they already approved? Because, you know, a lot of times they already been approved with so-and-so. I just want to use you.
Yeah.
You know, and we go with that typically. But if there's programs that's out there, obviously, you know, if somebody's have grants and have a great program for them, I'm going to mention it. And then they have the option to utilize that program.
Okay.
Okay. But the main thing we talking about, guys, and before we leave anything, we have a homeownership and financial workshop on June 10th from 4 to 7 p.m. June 10th from 4 to 7 p.m. Where? African Leadership Group here. I think it's 10700 East Evans.
Yep.
It's going to be here. We're going to have signs out there, and it's on a Saturday this time. So you have time, put it in your calendars and plan for it. Any last minute questions?
I have one more question.
Okay.
So when a client is ready with their credit,
Okay.
who is the next person to refer them to? The lender or the realtor?
I'm selfish. I want the realtor portion.
You want the realtor, okay.
If you got the credit, come to me. Obviously, I know people are gonna close, but I know I've been in business for a while, so I know who to. Depends on what situation you tell me, and we have that conversation with kind of lenders to refer them to based off their situation. You know, I mean, if
They get pre-qualified.
Yes.
That's a big part of it.
Exactly.
The qualification process
Exactly.
is huge.
You know.
So my process is when the client is ready with their credit and they are not sure how their income looks like, if they are even going to qualify for a home, I always tell them go to a lender, have them run your credit and do a pre-qualification for you to see how much you can qualify for, because that will determine if you're ready for homeownership or you need to find somebody else that can be your co-signer.
So when they come to me, I say go get the money. So
Okay.
that's my thing. We gotta go and say it's the same thing. The first thing I tell them, go get the money. So, but I just kind of refer them this way and that way, because I know, kind of know what their situation. But it's always go get the money first.
Yeah. Okay.
Okay.
Good. Thank
All
you.
right.
Thanks. Thank you.
Don't forget about the Home Ownership Financial Workshop June 10th. We're gonna start putting the posters out. If we're gonna put flyers out, we're gonna post it on social media. We're looking forward to seeing you. You can ask us any questions. You can sit and talk with people one-on-one. Okay?
Yes.
All right. Thank you, everybody. Have a blessed day.
Thank you.
Thank you. Thanks, everyone.